Good evening. So today in our fourth session of learning technical analysis, we will now continue our discussion from where we left over last, where we have, after having understood the hypothesis, the candlesticks, and general trend guidelines as per Dow theory, where we focused on higher highs and lower lows, we will now begin to use certain indicators in order to give our trend outlook a very specific bias. So, what we will do today is I have actually prepared two slides for it, but instead of two slides, let's just focus on 2 points. The first 2 points of this visual presentation. The first one being is that in order to establish your trend, sorry, in order to establish your trend, we will basically be using two indicators. One of them is a 200 moving average, and another one is to set an indicator called ADX. What is an ADX and what is a moving average? The assumption is that you will study that by yourself, and and what we will do is we will try and establish a process of identifying trends and using these indicators practically to see if we can come with some more objective decisions. The other elements of the same process, such as using different moving averages and to assess the distances between those moving averages, are also equally applicable. But I think we will begin with the easier, the faster method and do the analysis on various macros on the weekly charts so that our study together remains applicable for quite a duration. So let's just get into some charting. Uh, All right, so I'll just going to any website which is free. So here I have investing.com. I have selected the first macro as USD INR, and in this I have selected a 200 moving average on the weekly time frame. Additionally, I have set up an ADX. So now the question is, what is it that we want to assess when we are looking at this chart with the moving average? So here in the presentation, I have mentioned that if the 200 moving average creates a new high, then the bias is long. If it creates a new low, then the bias is short, else it's a range. Similarly, if the ADX is above 25, then we are in a trending market, else it's a range. So now using this, let us just have a look at the USD INR. So have a look at its 200 SMA. We see it at say approximately 70, and we also see that it is clearly creating a new high. So since the 200 SMA is creating a new high, we know that the bias in this case is long. So I'll just is long, and also the ADX is at 14, which means that the trend strength is very weak, and therefore we are looking at a long range. So in other words, USD INR on longer time frames is trending in a range with an upward bias, with a clear support at the 200 weekly moving average of around 70, at which point it becomes a good value buy. So similarly, we can do this assessment over multiple securities. So say for example, we select gold. So I'll just select gold mini here. And again, what do we get here? We see the 200 SMA. The 200 SMA at 36,700 is clearly creating its all-time highs. And we see that the ADX is at 19, which means much like the USDR, the gold is also trading in a long range. All right. Likewise, we come to say silver. Silver mini. So here, interestingly, silver 200 SMA is not creating an all-time high, and it is also not creating an all-time low. In other words, we are looking at a structural range in the silver. But if we look at ADX, it is about 25, which means that we are looking at a strong trending move in the direction of the range. So we have a range, but we are also looking at an ADX above 25, which means that we are looking at a far more active, a more volatile security. And if we have to trade this particular security, we have to trade this like a ranging security, because that is its historic tendency. And given that it is at its high of the range, we have to anticipate or look at methods to go against the top of the range. Let's do this for the interest rate, the Indian interest rate. So we'll take the 10-year interest rate. Um, Here we are. Now, in this case, we can clearly see that the 200 SMA is moving downwards and has created a new low, and the ADX is 22, indicating that it is actually a short side range. All right, and we also have a look at Nifty 50. We get the 200 SMA at 11,150, creating new all-time highs, and at 29, which means not only is it trending, not only is it long, but it is long trending security. And similarly, if we have a look at Nifty 500, we see a similar thing, a new all-time high on the 200 SMA and an ADX above 20, which once again means the same thing here, long trending. Now here, once we know that a security is long, we are always going to take the direction of the trade. So the trade direction, I'll just put. So here, once we know that the bias is long, the positional direction is always going to be long. And since we know it is a range, so long around pivotal lows or 200 SMA. So this is what this implies for us, because it is a long range. So this will be the trade pattern for all that we trade here, which is in a long range. Whereas this same thing becomes short around pivotal lows or 200 SMA for the interest rate 10 years, which means that when we want to short the 10-year interest rate, we go long on the bond market and we buy the long-term government bonds. Now, once we have a long and trending, so it automatically means we are going to go long and we are going to buy the pullback. And this approach is now going to be in both cases, Nifty 50 and Nifty 500. And when it comes to buying the pullback, that is basically when we approach the subsequent part of the slide as to determining which pullback we want to buy and what is the strength associated with the security. You can, as an assignment, I have listed out all the broader thematic indexes here in India. You can do this for any part of the world. For example, you could, if you want to have an assessment of the British stock market. So we could just say, for example, search for the UK 100 FTSE index and have a look at this one. Now, what are we getting here? We are getting, so I'll just create this here. I mean, just as a reference. So say for example, I put the FTSE. So now what are we getting? We are clearly getting that the 200 is sloping downwards. Now we want to see it in relation to the previous pivotal low. So the pivotal low came somewhere around these levels and we are not seeing it create a new low yet. So in other words, we are going to call this a range market. And what are we getting ADX as? We are getting ADX as 12. So which means it's another absolute range. Alright, so this generally is a no trade zone for a trend trader. That is, we will expect the UK market to basically range. And to range till what levels? Once we are anticipating a range in the market, we are always going to look at pivotal lows as a reference. So here we basically have the 5,500 mark as one pivotal low as a reference, and we obviously have the 7,500 mark as the next pivotal low as a reference. At 6,500, this is a no trade zone for any positional trader, though a swing trader or a day trader, etc. They will not be analyzing the trend on a weekly either. So um, so yeah, this basically gives us say, and similarly, if you want to do this for say the SP 500 or maybe US 500. Now compare the US stock market to the UK stock market and you see a world of a difference. The US stock market looks much like, I mean, or the Indian stock market looks much like the US. We have a clearly long market and the ADX is above 26, which means that the US stock market is basically the S&P 500 is basically trading in long trending. And this is what we want to do. We want to long and we want to buy the pullback. You could extend this to say, for example, the DAX, the German market. And again, we are seeing the 200 SMA create a new high, but with extremely poor ADX. So which means this is a long range. And you could do a similar one with say CAC. This is now the French market. And we are seeing a similar structure play out here, a 200 SMA creating a new high, but the ADX is extremely low, which means once again we are looking at a long range. So we can use this to analyze a general bias, and once we have a general bias, we want to focus on the ones in which we can come up with a clear plan. And we know that whenever something is ranging, we want to react at pivotal highs and lows, and whenever something is trending, we want to buy the pullback. The pullback could be in the form of a moving average dip, or it could be form in the form of Fibonacci supports. This is something that we will discuss subsequently. Anyways, I hope you found this video useful, and that through this structure you can create an analysis of multiple broader markets. And once you find a particular broader market that is interesting, so say for example we have done Nifty IT already, so we will mark it as long trending. Now, I mean, if you find Nifty IT interesting, then obviously the task becomes to go into the stocks within this basket and to identify stocks that you find interesting. And in that context, you are trading in bullish trending stocks of a bullish trending index in a bullish trending market. You just have to identify the lows where you want to buy and come up with a trade plan, which is something we will discuss as we proceed in our learning journey. So I hope you found this exercise useful. I wish you a good weekend. Have a good trading week ahead. Take care.